Robinhood just made a huge announcement for the entire crypto sector, and it's going to be extremely beneficial for Dogecoin. But before we talk about that, let's look at some interesting data that came out today. So the number of Shiba Inu followers on Twitter keeps growing as they have now reached 3.3 million. This is interesting because this is the number of people who follow the official Dogecoin account on Twitter. Aside from catching up with Doge on Twitter, the number of wallets holding Dogecoin is still way ahead of Shiba Inu. Dogecoin has roughly 4 million holders around the world, while the total amount of wallets that store Shiba Inu is around 1.16 million. Now talking about Doge analysis, Dogecoin has a hint for intraday traders thanks to the symmetrical triangle pattern which may launch Doge forward. Traders usually consider a symmetrical triangle a bullish pattern as it statistically results in an upward breakout. This sounds really bullish, but there's another possible scenario that we need to keep in mind. We should not forget about the possibility of a bearish scenario in which an asset breaks the lower border of a pattern and speeds downward. Currently, Doge is more actively testing the lower border of the formation, hinting at a plunge down rather than a short-term upward rally. But still, there's some incredible news that came out from Robinhood today that might make things better. So Robinhood announced a new digital Web3 wallet. Robinhood said that its new non-custodial Robinhood 3 wallet would allow users to hold the keys for their crypto, earn yield, and trade or swap crypto, including non-fungible tokens, without paying network fees. And the transactions will also be commission-free. Users will be able to store their NFT and connect them to online marketplaces for the first time with the new digital Web3 wallet. Basically, this wallet will allow Doge holders to have total control of their digital assets as well as grant them access to decentralized web protocols. Robinhood CEOs and co-founder Vlad Tenev said that the wallet will serve as a way to expand access to decentralization exchange platforms and hand over ownership of digital assets to their owners. He also said that our primary objective is to give customers a great product, an opportunity to not just trade through the centralized exchange of Robinhood, but also keep complete control and custody of their keys and help them access decentralized exchanges and swap coins. Our focus is on just making sure that this is the way for our customers to access Web 3.0 and maintain self-custody going forward. So there you have it. Robinhood wants to give even more control and freedom to its holders. I truly believe that this new wallet is going to bring in a lot of new Doge holders into Robinhood and many crypto haters into the crypto ecosystem as well. Now before I come back to some more Doge price analysis, let's talk about some alarming news that came from the US government. So SEC Chair Gary Gensler said that he wants a bigger budget to oversee the crypto space. He said that the highly volatile and speculative crypto marketplace has mushroomed, attracting tens of millions of American investors and traders. The volatility in the crypto markets in recent weeks highlights the risks to the investing public. There was one crypto complex that went from $50 billion in value to zero just in the last 3 weeks. He also said that his 1,300 staff enforcement division has just over 50 people focused on crypto, but that he's also adding new people to it. This just means that the US SEC might soon start their crypto crackdown. There's another alarming news from the US government from today, but before that, let's look at some new data for Bitcoin. We're talking about Bitcoin because of its alarmingly high price correlation with Doge right now. So Bitcoin is still trading near 30K, which marks the bottom of a year-long price range. And this article talks about 2 metrics that show that the bottom is closer than we all think it is. The first metric is the crypto fear and greed index fell to 8 yesterday, which marks dire, extreme fear levels. The crypto fear and greed index has dropped to its lowest level in nearly 2 years. The good news is that the present extreme fear may attract buyers who have been waiting for extreme oversold conditions to buy and hold cryptos in the long term. Another metric is Bitcoin's idle addresses, which have become more active this past week, resulting in a spike in the age consumed. Typically, when age-consumed spikes occur during price declines, it infers that weak hands are exiting positions. With that being said, let's talk about how the crypto and stock market did today. So the US market saw a swift reversal of prior gains on the day, with the S&P 500 down 2% and the Nasdaq 100 down 2.3% within the first hour of trading. The big surprise came from grocery giants Walmart and Target, both of which saw the biggest intraday declines since the weeks prior to the 1987 Black Monday market crash. Walmart was down over 15% in 5 trading days, while Target was nearing 25%. Talking about altcoins, Rect Capital said that altcoins have retraced a lot, but previous bear markets suggest they could go lower. So if Bitcoin loses its macro range low, that would confirm more downside in the crypto market, and that could in turn enable altcoins to follow their standard bear market correction of over 90%. While this is definitely a possibility, there's simply a lot in the cards for Dogecoin at the moment which makes me believe that it won't fall below 7 cents. Talking about the crash, we know how a lot of altcoins suffered great losses, but there was one coin that you need to keep in mind that yielded amazing returns. I'm talking about UST here. As USD was headed for zero and UST was processing billions in redemptions, UST was padding its market cap. At the start of the crash on May 8, USD coin had a market cap between $48 billion and $49 billion. But right after that, it began heading upward on May 11, and now it sits at $52.26 billion. This is amazing because it is near its all-time high of $53.6 billion set in March. Now coming back to the huge warning from the US government. So it says here that the IRS may be missing out on more than $50 billion a year from crypto traders not paying their taxes, and the agency is taking notice. Basically, the difference between how much tax revenue the IRS collects and how much it is owed may be as much as $50 billion per year. Barclays made its calculation by extrapolating data referenced by the IRS in 2017 to estimate that the current crypto tax gap represents a full 10% of the overall national tax gap. The point is that the IRS is finally aware of it, and so if you were planning to evade crypto taxes, you need to think again. The best course of action for crypto traders is to be upfront and honest about their taxes on the crypto purchases and sales they make in a given year. Since the IRS audits on a 2-year lag, traders who failed to report gains in the past may still get caught. But enough about the bad news. Let's talk about some great news about crypto adoption. So Equinox, which is a luxury fitness center in New York, recently announced it's going to permit crypto payments for gym memberships and merchandise. And then there was Primer, which has partnered with a leading Bitcoin payments infrastructure company, OpenNode, to accelerate crypto mass adoption. So Primer currently operates in 30 countries with a wide range of supported payment features and OpenNode services in 126 countries. Just in case you don't know, Primer is a global payment infrastructure provider, and it now allows merchants worldwide to accept crypto as payment through a one-click checkout function through a partnership with OpenNode. OpenNode is a Bitcoin payment infrastructure provider, and with Primer's leading commerce automation platform, users worldwide will be able to access seamless payments using crypto. Now coming back to Dogecoin, let's look at its price chart and some important data. Let's start from December. A set of Fibonacci retracement levels was drawn based on Dogecoin's drop from 34 cents to 13 cents during November and December. It can be seen that both the 38.2% and the 23.6% retracement levels at 21 cents and 18 cents have acted as resistance in the past 5 months. Dogecoin's inability to climb past these two retracement levels showed that the trend was firmly pointed downward. Moreover, on each rejection, the daily candle had long upper wicks meant that buyers were exhausted in their attempts to drive prices higher. In early May, the price fell below the 12.5 cent support and proceeded to drop another 35% to 8 cents. The point is that in the weeks to come, a revisit of the 12 cents area or a daily session close below the 8 cents level can both be used to enter a short position on Doge. The RSI on the daily chart has been below the neutral 50 line for the best part of the past 6 months, with an exception being the mid-March rally. Currently, the RSI is at 32 and shows strong bearish momentum. But still, the 40 mark on this indicator could have some importance in the days to come. So we need to look out for that because a session close above 40 would signal a weakening bearish pressure. In any case, I'm still bullish in the long term because of the big news from Robinhood that came out today. What do you feel about it? Let me know in the comment section below.